Hello traders, you're welcome to the Forex Geek channel. If you are here for the first time, I welcome you especially. If you are already subscribed to this channel, then you're welcome once again. If you are not yet subscribed to this channel, you are missing out on a lot because we cover a lot of interesting topics on this channel, ranging from indicators to strategies to systems to Forex related platforms and a whole lot of information. All right, so without further ado, let's just get right into what we have for this video. Okay, don't forget to subscribe if you're not yet subscribed, and then don't forget to hit the notification bell as well so that you never miss out on the latest Forex tips and strategies. Now in this video, we are going to be diving into a topic that is essential for any beginner. Okay, so if you are a beginner, please stay tuned because you have a lot to learn. All right, so we're going to be looking at moving averages basically. Okay, specifically we are going to discuss the best moving average to use when you are just starting out in Forex trading. Okay, now moving averages are one of the most powerful indicators in a trader's arsenal. Now, it does not guarantee profit. Please take note. Okay, when I say powerful, when I say powerful, I do not necessarily mean that it will assure or it will guarantee you profit. Okay, please. What I mean by powerful is in terms of its effectiveness, in terms of its efficiency, in terms of its you know the frequency of use by traders. Okay, now moving averages are effective, but if you are a beginner, figuring out which one to use can be overwhelming. So don't worry. In this video, I'll break down different types of moving averages and help you choose the best one for your trading strategy. Okay, so let's get right into it. Before we get into which moving average is best, let's quickly go over what a moving average is. All right. So a moving average is a statistical calculation used to smooth out price data over a specific period of time. Okay, essentially, it helps you identify the direction of the market trend by filtering out the day-to-day price fluctuations. Okay, so there are different types of moving averages actually, but the two most common used in Forex are the simple moving average and the exponential moving average. We can see them here. This is the MetaTrader 4 platform. So if you want to see the particular moving average, you can just you can go to insert, go to indicators, go to moving average, and then under MA method you can select either simple or exponential or smooth or linear weighted. So simple and exponential are the two most common types. All right, now let us start with the simple moving average. Okay, now the SMA is the basic. Let me remove the exponential. All right, okay, this is the simple. Okay, so the simple moving average is the most basic form of a moving average. It calculates the average of a currency pair's price over a specific period of time. For example, a 50 period. Now, this is a 20 period. Let me just use the 20 period as an example. The 20 period SMA, okay, is going to calculate the average price over 20 periods. For example, if you're on a daily time frame, what it means is that the SMA, the 20 SMA, is going to calculate the last 20 days, the closing prices for the last 20 days. Okay, we can see we apply to close, so it's going to use the closing prices. If you apply to open, you're going to use the open price. Okay, so it's going to calculate the close prices, the average over the last 20 days. Okay, so here is a downside to the SMA. Okay, especially in fast moving markets, because it equally weights all data point. Like it gives equal weight to all data points. All right. In as much as the SMA is useful in trading markets, especially when the market is not too volatile, it's great for identifying support and resistance levels, but it gives equal weight to all data points, and it can sometimes lag behind the price action. So that's one of the downsides. Okay, this means that it might not always react quickly to sudden changes in the market, which can be a disadvantage for more active traders. All right. Now, the SMA is a great choice if you are a beginner who is looking for a basic, easy to understand indicator. Okay, it works best in slow to moderate market conditions where trends are clear. For example, you can see in this situation, the trend is clear. So if you are trading this kind of market, perhaps the SMA can be a good choice for you. Okay, now let us talk about the exponential moving average. All right, the EMA is very similar to the SMA. I'm just going to be changing this now to the EMA, exponential moving average. All right, so now the EMA It is similar to the SMA, but with one key difference. It gives more weight to the most recent prices. We can see how the moving average changed as I changed it from S to E, as I changed it from simple to exponential. You can see how it began, it developed some waves, right? Let us look at that again. Compared to the SMA that is just, quite straight, with a little curves. The EMA, you can see it's more curvy. The EMA is more curvy because it is reacting faster. It's giving weight to recent prices. All right, it gives more weight to recent price change. Okay, so the EMA is great if you are looking for quicker entry and exits. Okay, it's perfect for traders who prefer shorter time frames or those who want to trade more actively. If you are a beginner and you are trading in a market that is moving quickly, the EMA can help you stay in sync with the price action. So now that we have discussed both the SMA and the EMA, the big question is, which one should you use as a beginner? Now, if you are brand new to Forex trading, I would recommend starting with a simple moving average. And here is why. Okay, here is why. The simple moving average is easier to understand. All right, the SMA is straightforward, and it doesn't require a lot of adjustments. Okay, it doesn't. Right? This makes it perfect for someone who is just starting to learn how to use the moving averages. All right, and then the SMA also provides clear signals. For example, let us just change this back to the SMA. You're going to see that the SMA, because it gives equal weights to all price data, you can just easily use it to identify the trend. If you look at it from the wider view, let me just zoom out a bit. You can see the SMA, because this is the daily time frame. I'm just going to increase this to 50, right? Because it's the daily time frame. You can see how the SMA clearly shows that this is a bullish trend. All right, you have price trade literally trading above it. You hardly find, compared to the EMA. I'm just going to do a very little experiment right now. Compared to the EMA, you will not find price making a lot of piercing through the SMA compared to how you see prices piercing through the EMA. Now let us check that out. Okay. Now, can you see that at these 2 points we had price pierce through the EMA, right? But now let us look at the SMA. Okay. Can you see that at this point there was not exactly piercing through the SMA? So the SMA, sometimes you will likely see price trading above it. You can even use trend lines to map out the higher lows that are being formed, in the case of a bullish trend, or in the case of a bearish trend. You can easily use trend lines to just map out the lower highs that are being formed. Okay, now in as much as the SMA might have some space below, it doesn't mean that there are no situations where the price touches the SMA. You will see that there are a lot of times where the price actually gets to the SMA and even breaks through it and all of that. But basically, if you are just starting out and you just want to get a quick, overview of the trend without so much waves from the moving average, then you might prefer the SMA. Okay. Now, the SMA also works well for longer term trends. If you are not looking to make quick short-term trades and are instead looking for a clearer, more stable trend over a longer period, SMA is an excellent choice. All right. Now, that said, the EMA can also be useful as you gain experience. If you are starting to get better, if you're starting to get a better feel for market conditions and want quicker signals, switching to the EMA can help you spot trends faster. All right. Can help you to spot trends faster because the EMA is going to be touching the candlesticks even more often compared to the SMA, right? So now, for a simple strategy, you could actually start with a 50 EMA. All right, you can start with the 50 EMA, to identify the overall trend, and then you can also decide to use the crossover strategy. The crossover strategy that requires you to add another moving average. Perhaps you can use the 20 EMA in this case. All right. So the crossover strategy, when you have the shorter term move above the longer term, the buy signal. When you have the shorter term move below the longer term, it's a sell signal. Okay. So now that combination is going to give you best of both worlds. However, if you want, a good strategy as a beginner, instead of even using the 50 EMA, you can use the 50 SMA instead. All right, you can combine 50 SMA with the 20 EMA. You understand? You can combine the 50 SMA with the 20 EMA, and you can use the crossover strategy as a beginner. All right, you can try that out. Okay, you can actually try that out. That combination is going to give you the best of both worlds. You have the stability of the SMA and the responsiveness of the EMA. So now that you know the basics of the SMA and EMA, let's talk about how you can actually use them in your trading strategy. So the first thing you need to understand is that moving averages are typically used to identify trends. If the price is moving above the moving average, the market is generally considered to be in an uptrend. Okay, as you can see in this situation, this is a clear uptrend because of how price is moving above the moving averages. All right. Now, on the other hand, if price is moving below the moving averages, then you have a clear down trend. Okay. Another way to use moving averages is to look for support and resistance levels. In trading markets, moving averages can act as dynamic support and resistance levels. You can see how in this situation, price was bouncing off the moving average because the moving average was actually serving as a ceiling. Okay, so the moving average is serving as a ceiling. That's the reason why you see price get to the moving averages and get rejected, because they are serving as dynamic resistance. In other words, they are serving as a ceiling where price gets to and reverses. Okay, that is in a sell trend, right? But in a buy trend, the moving averages serve as a floor where price gets to and get rejected and goes back up. Okay, so you can also, while using the moving averages strategy as a beginner, you might not exactly know how to plot your support and resistance lines, but it's very easy. If you want to do that, you just have to look for at least 2 points of reversals. Okay, for example, here we can see that we had 2 points of reversals, and you can just draw a horizontal line that can give you future predictions of where price might reverse. Okay, so in addition to using the moving averages, you can also use horizontal support and resistance levels just to give you an indication of possible reversal points. Okay, that's also very important. All right, so to wrap things up, when you are just starting out in Forex trading, I recommend sticking with the simple moving average to help you identify overall trends. It's easy to understand and it will give you a solid foundation in how moving averages work. Okay, as you become more comfortable, you can experiment with the exponential moving average for faster signals in quicker moving markets. Remember, there is no one size fits all approach when it comes to trading. The best moving average for you depends on your trading style, risk tolerance, and how active you want to be. Okay, and as you grow as a trader, feel free to test different strategies and combinations of moving averages to see what works best for you. If you found this video helpful, please hit that like button and don't forget to subscribe for more trading tips and strategies. If you have any questions or want me to dive deeper into moving averages, drop a comment below. I would love to hear from you. Happy trading, and until next time, stay smart and stay profitable. See you in the next video.